Thank you for tuning in to the Mortgage Innovators podcast. Before we get into today's episode, we want to remind you that the Mortgage Innovators Conference 2023 Innovators Unite will be held June 14th and 15th at the Hilton Anaheim. Sponsorship opportunities are now open, and if you want more information, head to mortgageinnovators.com/conference to keep up to date. Greetings, everybody. Welcome to the Mortgage Innovators podcast. My name is Margaret Chiavini, and we're excited that you're here today. I am honored to be joined by the chairman and CEO of FundingShield, Suri. Welcome, Ike.
Thanks for having me. Good to see you again.
Absolutely. So we have a fantastic episode today. It's everybody's favorite topic, cybersecurity and fraud threats. So you're really an expert along with FundingShield on that. So let's get started. You have a new report that your company has just released. Would you tell our listeners a little bit about what you found in that report?
Sure. So we just released our fourth quarter 2022 fraud report. We've been doing that for the last 2-3 years. And every quarter we publish our findings on behalf of our clients that we process on closings when it comes to mortgage closings transactions. And what we compare every quarter to the other quarter. In Q3, the errors, perpetuated, neglect, mismatch, and so on that we found in processing these transactions was close to about 48%. 48% of transactions that we were touching on behalf of our clients to do verifications were about 47.9, 48%. In fourth quarter, it went up. It went up to 50.8%, which is an uptick of a decent percentage. It's just mind-boggling that 1 out of 2 transactions have got issues that can lead to high risk, unmanaged, not regulatory compliant, and that can lead to fraud. And that fraud has been rising substantially over the last few quarters.
And would it be fair to say that one of the greatest threats that face the mortgage origination group today is really fraud?
It is, especially when the industry's gone through the last couple of years during pandemic, COVID, and digitization that it's been trying to embrace while right-sizing, going through hybrid work environments, working from home and different networks. And that leads to a number of situations where vulnerabilities get higher and higher. There's more touch points on touching the same data or exchanging data using new technology solutions, although trust is great when you're working with people you work, but trust and no verification does not help. And bad actors in an environment like this, internal from the company itself, stakeholders themselves, their exposures, because lenders don't have any control or any oversight into how those guys are communicating with each other, which Wi-Fi they might be using, which network they might be using, is their router hacked or not, or is their networking systems are compromised, our emails are compromised. There's so many different permutations that are beyond control of a lender or even a consumer that leads to tons of open areas and exposure where bad actors from, be it overseas, internal, or within the US, that want to take advantage of the biggest purse that they can go after, which is when someone's buying a house. It's no longer 2 decades long of exposures on credit card theft. They don't have to go through 10,000 transactions at $10 each to make $100,000. They can just hit one transaction and walk away with $500,000. And we've been seeing that routinely for the last several years, where this has just become a very, catastrophic event in a mortgage originator's life, because as we know, there might be 4,000 plus originators in the country, bank and non-bank lenders. And large banks and depository banks have better resources at play, and they can withstand some losses, but not in this climate, not in this environment. But for the large percentage of these independent mortgage bankers, a single loss can turn them out of business because the leverage on that capital is pretty high in turning that money. So it's been devastating for a number of folks in the market, especially when interest rates are high and volumes are down. Fraud has an inverse relationship. It only goes up. and which is apparent in our findings that we shared.
Yeah. Well, it's interesting. There's never a time when losing money works
Right.
in terms of fraud. However, this particular time in our industry, it's, as you say, especially devastating. Ike, a lot of times on this podcast, we like to give very practical advice to our listeners about, what can they do. So what would be examples of what mortgage bankers and mortgage originators can do to protect themselves against all of these? I mean, there's a threat around every corner.
Yeah. No, absolutely. I think I use a couple of examples to talk in layman terms. When COVID hit and prior to COVID, in the medical industry and health industry and life sciences, a virus invades our body and you got to come up with a vaccination and a tool to prevent yourself. Same thing with arms, even though the country might be divided between guns and no guns. But when someone invades someone's house, people want to be equipped to be able to protect themselves and have some sort of equipment or arms to protect themselves, prevent, be it a pepper spray or be it a gun, depending on the choice. And then when it comes to cyber invasion and theft, which is just rapidly growing in a digital economy and in an industry that's being digitized over the last couple of years, especially where it's so disparate with stakeholders, it's very important to arm yourself. So some of the things that our clients in the industry has been doing very well has been creating awareness and advocacy from all sorts of different organizations, such as California MBA, MISMO, and awareness that CFPB and FHFA and others are ensuring that the industry gets to be aware of, and media in general. But beyond that, I think because of this digitization in a digital economy that the operators are working in, and home buyers are searching homes and applying through, it is quite important, and we've seen that the steps firms are taking are to ensure that they are adopting technologies with proven track record that have enough behind them to deliver a solution that is seamless, safe, and secure. And in order to do that, you have to continue to explore, continue to work with trusted parties that are not only going to deliver automation to help you cut down time and cost and workflows that you want and equip your resources in a climate where you might be right sizing, be it for growth or be it for downsizing in this environment, so that no one's cutting corners. And embracing those kind of technologies allows them to get ahead and be better prepared. So proactive approach is what's needed. Best defense is your offense. Take advantage of the advancements that have occurred, and so far in the industry. So there's plenty of options, including one of them being us at FundingShield.
Yeah, what we talk about a lot on this podcast is using your partners, or your vendors, your technology partners, having a collaboration where they're working together. And I really like what you said, that, make sure that you are using technologies that have a track record where they're going to be able to reveal any blind spots that your company has. Absolutely. Where you are vulnerable.
Yes. Vulnerabilities it takes a village to protect a community. And the mortgage industry is so large, so disparate, and also so resilient and strong that learning from each other's exposure and weakness or strength becomes a very good tool to exercise. So proven track record of companies with solutions reflect that, because the only reason they have a track record is because by osmosis they've learned the pain points of lenders, resolve them by providing solutions, and then having some mileage behind themselves to say, we found the problem and the pain point, and we know what it is, and we see it from various different kinds of operations, various different kind of companies with a different personality or character or workflow or dependencies or exposure. And so that all, when aggregated, puts you in a position to be a good problem solver and provide the solutions. And that's how we got together as a firm. I mean, looking at pain points and listening to the troubles of the community and delivering that problem solution.
Well, the other thing that I really appreciated that you said, we think of cybersecurity and we think of fraud threats. We think of, oh, Russia comes in and trick the funder to wire the money to Moscow. And what you said is there's a lot of other ways that you can be, susceptible to fraud, just like your example. Are you actually, doing a loan where someone isn't licensed?
That's right.
Example.
Well, there's so many, especially since 2009, when regulations changed to handle the industry better and protect the consumer and make it efficient. Since then, the burden of all these verifications sit on the lender. However, the business is so competitive and you have to move so fast and it's so driven that not everybody, you can pass laws and regulations, but if there's no enforcement or governing body doing it, enforcing it, then every lender is left to their own ability to manage risk. And if they're cutting corners in an environment like this or not compliant, no one's really catching them until they get in trouble. Yeah. And they themselves are not opening up their closet to see what skeletons are in there because they're waiting until it happens. And if they become a statistic based on the percentage of fraud that we're talking about, 1 out of 2 are leading to those kind of things, you're really going to be a statistic soon enough. And we've seen in this environment, especially when everybody's down 65, 70% on an aggregate basis, we've seen our existing clients go through pain with less resources, being more exposed and seeing what's hitting them, getting dependent on technology that they're comfortable with to cut down time, cost, and at the same time simultaneously be compliant and prevent fraud and not get out of business. And it's more than that, because once they do package a loan and manufacture a loan, if it's got issues and they haven't gone through these kind of proactive solutions and adopting them, post-close, there's a lot of reconciliation work that needs to be done on that same asset, and that's 10 times more expensive rather than what's been done proactively pre-close. So we've seen a whole lot of in the journey of this making a mortgage and how you go through it towards the end. There's a ton of exposures and a ton of ways to resolve those problems. It's a challenging market, but definitely we've seen growth. Existing clients appreciate what they have. New clients coming in when they are looking to, there was a paradigm where I don't want to use fraud issues. I want to spend money on tech to originate. And that cost has gone from $1,500 a loan to $10,000 a loan. Right. But if you can't close after spending $10,000 because you tried to save $100, thinking that it's going to cost you money, and the money gets robbed, you're out money, and you're basically dealing with a catastrophic loss. Penalties, investigations, audit fees, and everything of that sort. A loss of 350 grand of an average amount of a loan might end up costing $800,000-$900,000 during the course of the year by going through that pain. That's the average reporting from MBA and so forth, right? So when you think beyond that, it ends up being quite useful to work ahead in time. And the paradigm, as I was talking about, has shifted to the sense that it's no longer I'm spending money for tech, for compliance or fraud prevention. I'm actually doing a tech save. The money I'm spending is giving me an ROI of saving $150, $200 per loan. And so the paradigm shifted from it's not a tech spend, it's a tech save. It's not just I'm saving cost on operations and time, but prior to that, some of them say, I want to first protect myself against fraud and compliance and regulatory issues. Because CFPB and FAA are coming down quite hard too, saying, do you guys have these policies in place that you're compliant?
Yeah, we talk a lot on this podcast about efficiencies, and I really like that you're bringing that up. Where can you implement something that actually will help you way more after the transaction's been closed? Yeah, that's so important.
Yep.
Hey, so we know that FundingShield is, one of the premier partners to help originators prevent cybersecurity issues and
Yep.
fraud. Can you just give us a quick just glimpse into what you and FundingShield are up to in 2023?
Sure. So it's an interesting year for the industry. I believe it's gonna have a mixture of results, as everybody's talking about, the fear of recession and so on. But at the same time, as interest rates adjust, there's a good reason to be optimistic about the rebound in this industry. You can only be on pause for so long, and as things changed for the better, it's going to come back with another robust growth. In the meanwhile, in this environment where our products have some relevance and are providing services, we find ourselves in a position where we've built enough of a sales pipeline that we've got a pretty large backlog that we're slowly continuing to execute based on our clients' appetite of when they start this week or next week or a month from now. So we're quite busy delivering existing clients and new clients coming in. Along with that, there's a huge opportunity for delivering new product solutions because the environment has become such that there's new players coming into market that no longer would just want to deal with a traditional loan operating system. They're dealing with migrating to e-closing platforms where automated workflows can be picked and chosen like Lego system blocks versus adopting a whole Lego box. And as these new players are coming into market, a ton of these strategic relationships and partnerships are happening and occurring with us as we speak. So there's going to be this nice climate where as things balance out and everybody's looking for more efficiencies, as we discussed, some of these new events and strategic partners and relationships and products coming in will allow independent mortgage banks to find those efficiencies in cost and efficiency and throughput. So we're excited about that.
Yeah, definitely. Well, listen, Ike, we are coming to the end of our episode today. I really appreciate you being here. I know sometimes this is a tough conversation, but it's a very, very important conversation to have. And, thank you for the contribution that you make to our industry and to so many originators in helping them deal with this very real threat. So any last minute words of wisdom to our listeners?
Well, I think we got to remain optimistic. Thank you for having me. We're humbled to take care of any issues. Any business we can get to resolve problems gets us going. So we look forward to what the next quarter's got to come. And we're quite busy and looking forward to a cautious, optimistic growth of different kinds. We've had a 63% growth last year in clients. So that's a sign of the industry is migrating towards adopting these solutions and preventing cyber fraud.
Yeah, fantastic. Super. Well, thank you so much, Ike, and thank you all for listening to today's episode. If you like what you heard, make sure to subscribe to the Mortgage Innovators YouTube channel or wherever you podcast. Until next time.
Thanks. Bye.